All right, so get ready, because today we're diving into some seriously high-stakes predictions.
Oh, yeah.
We're talking stock market face-off.
Okay.
And in one corner, we've got Palantir Technologies fresh off a monumental year.
Really?
I mean, their stock surged a staggering 360% in 2024.
Wow.
Leaving the entire S&P 500 in the dust.
That's incredible.
So the question is, can anyone even come close to matching that kind of performance?
Well, it's not just about matching the performance. It's about understanding the momentum it takes for a company to have that kind of meteoric rise.
Exactly. And to put this to the test, we're going to pit two companies, Shopify and Uber Technologies.
Interesting.
Against this Palantir juggernaut.
Okay.
Can either of them close the gap and potentially surpass Palantir's market value by the end of 2025?
So we're talking just 1 year.
Just 1 year.
Which makes this challenge even more exciting.
Definitely a tight time frame.
It is. So make sense of this. Let's think about market value.
Right.
Like the total worth of a company's shares.
Right.
It's like a giant scoreboard that tells you how much investors value a company.
Okay, that makes sense.
All right.
So to win this challenge, either Shopify or Uber needs to have a higher market value than Palantir.
Yep, by the end of next year.
By the end of next year.
Precisely. And right now, Palantir is sitting pretty with a market value of $180 billion.
Wow.
That's the target our contenders are aiming for.
$180 billion. That's a steep mountain to climb.
It is.
So let's start with Shopify.
Okay.
They're currently sitting at $140 billion.
All right.
To reach Palantir's level, they'd need to increase their value by about 29%.
Wow.
In just 1 year.
In 1 year.
What do you think? Is that even realistic?
Well, some analysts believe it's within the realm of possibility.
Okay.
Loop Capital analyst Anthony Chukumba, for instance, recently set his price target for Shopify at $140 per share.
All right.
That represents a potential 30% upside, which aligns perfectly with the growth we're talking about.
So there's some optimism there, but what makes people believe Shopify can pull this off?
Well, Shopify has carved out a really impressive niche in the world of e-commerce.
Okay.
They've built a platform that allows businesses to manage everything from online storefronts to physical stores all in one place.
I've heard good things about their platform.
Yeah.
It's more than just software, right?
Right.
They handle things like payments, taxes, marketing, even shipping.
That's right. They're essentially a one-stop shop for merchants.
Yeah.
Which makes them incredibly attractive to businesses of all sizes.
So it sounds like a really great platform.
It is.
And to put their dominance into perspective, they power over 10% of all online retail in the U.S.
Wow.
And more than 6% in Western Europe.
That's incredible.
So they're a major player, second only to the giant Amazon.
Yeah.
But here's something I'm curious about.
Okay.
You mentioned Shopify is also making waves in wholesale.
Yeah.
Is that really such a big deal?
Oh, it's a big deal.
Isn't wholesale just a different type of retail?
It is a different type of retail, but with much higher stakes.
Oh.
The wholesale market is actually 4 times larger than the retail market.
Really?
And it's growing 50% faster, according to Grandview Research.
Wow.
So that means Shopify's success in this area could be a huge driver of growth for them.
Okay, so wholesale is clearly a market to watch.
It is.
And it looks like Shopify is making some serious moves.
They are.
But what about their financials?
Okay.
Are they actually performing well enough to justify these high expectations?
Well, their recent performance certainly paints an optimistic picture in their third quarter 2024 results.
Okay.
Shopify reported a 26% increase in revenue, reaching $2.1 billion.
Wow.
This was driven by both software subscriptions and merchant services, showing a diversified income stream.
Okay, that's solid growth.
Yeah.
But what about profitability? Are they making money?
Right.
Or are they just burning through cash to achieve this growth?
That's a great question, and the answer is a resounding yes.
Okay.
They are making money.
Yeah.
Their non-GAAP net income, which is basically a measure of their profit after stripping out certain costs, surged by 46% to reach $0.35 per share.
Right.
Think of it as a simplified way to see if a company is making a healthy profit from its operations.
Okay, so they're growing, they're profitable, and they're expanding into new markets.
Yes.
But their valuation of 94 times their adjusted earnings seems pretty high, doesn't it?
It's true. It is on the higher end.
I mean, that suggests that investors are expecting massive growth in the future.
They are.
What if they don't deliver?
Well, here's the thing.
Okay.
Shopify has consistently exceeded earnings expectations for the past 8 quarters.
Really?
This means they've been delivering better than expected results time and time again.
So they've got a history of overachieving, which maybe explains why investors are so confident.
Exactly.
But let's not forget they're up against Palantir, a company that's been on an absolute tear.
Absolutely. So let's shift our focus to the second contender in this face-off,
Okay.
Uber Technologies.
All right, let's see what Uber brings to the table. Where do they stand right now in terms of market value?
Uber's current market value sits at $129 billion.
Okay.
To surpass Palantir,
Right.
they would need a whopping 40% increase in their market value.
Oh, wow.
Over the next year.
Okay.
That means they have to add over $51 billion to their value,
Right.
bringing them to a staggering $181 billion.
Oh, wow, that's a huge jump, even bigger than what Shopify needs to achieve.
It is.
But are there analysts who believe Uber can actually pull this off?
Believe it or not.
Okay.
There are multiple Wall Street analysts who think it's achievable.
Really?
The average price target from 59 analysts is $90 per share.
Okay.
Which implies a potential upside of 48% from their current price of $61.
That's a lot of faith in Uber.
Yeah.
But what's driving this optimism?
Yeah.
I mean, they're known for ride sharing.
Huh?
But is that really enough to fuel that kind of growth?
Well, Uber is much more than just a ride-sharing company these days.
Okay.
They've strategically expanded into the food delivery market,
Right.
becoming a major player in that space as well.
So they're not putting all their eggs in one basket,
Yeah.
which is smart.
Yeah.
But how dominant are they in these markets?
Okay.
Are they just a small fish in a big pond, or are they a force to be reckoned with?
They're definitely a force to be reckoned with.
Okay, good.
In the U.S.,
All right.
they hold a commanding 76% market share in ride-sharing, according to Bloomberg.
Wow, that's a lot.
And in the food delivery space,
Okay.
they're the number 2 player in the U.S. with a 24% market share.
Okay, those are impressive numbers. And with that kind of reach across multiple markets,
Yeah.
they must be gathering a ton of valuable data.
Right? You are absolutely right.
Okay.
Uber's vast network gives them access to a treasure trove of data.
Yeah.
This data allows them to predict demand, optimize driver routes,
Okay.
and even personalize user experiences in a way that most other companies can only dream of.
So they're leveraging their data to gain a competitive edge that's smart.
Yeah, it is.
And let's not forget their unified app. They've seamlessly integrated ride-sharing and food delivery into a single platform,
Right.
making it incredibly convenient for users.
It is.
What do you think is this unified app strategy a key driver of their success?
Absolutely. This unified approach is incredibly powerful.
Right.
It streamlines the user experience and makes it ridiculously easy for Uber to cross-sell their services.
That makes sense.
Imagine you're using the app to book a ride,
Yeah.
and then you see a tempting offer for food delivery.
Right.
It's a brilliant way to capture additional revenue from existing users.
So do we have any data that shows how effective this cross-selling strategy is?
We do.
Okay.
And it's pretty compelling.
Right.
31% of first-time food deliveries on Uber Eats
Okay.
originate from people who were initially using the app for ride-sharing.
Interesting.
And on the flip side, 22% of first-time ride-hailing trips
Okay.
come from users who are initially using the app for food delivery.
Wow.
That shows the power of their integrated platform.
Yeah, it really does. Okay, so the unified app seems to be a real winner for them.
It is.
But how did they actually perform in the third quarter of 2024?
Okay.
Were they able to meet the high expectations set by analysts?
Their third quarter results were solid,
Okay.
even though they fell slightly short of analysts' expectations for gross bookings,
No.
which is basically the total value of rides and deliveries booked through their platform.
Yeah.
Despite this slight miss,
Yeah.
their total revenue for the quarter jumped by an impressive 22%, reaching $11.1 billion.
Okay, so still significant growth.
It is.
What were the main drivers behind this performance? Was it driven more by ride-sharing or food delivery?
Mobility, which includes their ride-sharing business,
Right.
was the star performer, surging by a whopping 29%.
Oh.
But food delivery wasn't far behind, showing healthy growth of 19%.
Okay.
So it's clear that their multi-pronged approach is paying off.
It sounds like their diversification strategy is working well.
It is.
But are they actually making money? Profitability is crucial for long-term success.
It is just like Shopify Uber is focused on profitability.
Okay, good.
Their non-GAAP net income rose by 46% to $0.35 per share.
All right.
They're demonstrating that they can grow revenue and improve their bottom line simultaneously.
That's encouraging to hear. Did their CEO, Dara Khosrowshahi, share any interesting insights
He did.
during their recent earnings call?
Yeah.
I'm curious to hear what he had to say about their future plans.
Well, Khosrowshahi highlighted the impressive growth of their Uber One memberships, which offer various perks across both ride-sharing and food delivery services.
So those combined services?
Exactly. These memberships saw a remarkable 70% jump in the third quarter.
70%? That's huge.
It is.
It seems like people are really seeing value in that combined offering.
They are.
But what's the real benefit for Uber? Is it just about attracting more users?
Well,
or is there something more strategic at play here?
The strategic benefit lies in the fact that Uber One members spend on average 3 times more than non-members.
Wow.
So growing this membership base is crucial for their long-term financial success.
So Uber One isn't just a nice perk for users.
Right.
It's a game changer for their business.
It is.
Were there any other noteworthy points from the earnings call?
Yeah.
What else is Uber focusing on to fuel its growth?
Khosrowshahi also emphasized the impressive performance of their advertising business.
Okay.
A segment that often flies under the radar.
Uber's advertising business.
Yeah.
That's not something you hear about every day.
It's not, but it has the potential to become a major revenue generator.
So is that really a significant part of their business?
No.
Or is it just a small side hustle?
Analyst Tom Champion from Piper Sandler believes Uber could rake in a staggering $5 billion in ad revenue by 2027.
$5 billion?
Yeah.
That's a bold prediction.
It is.
But is the advertising market big enough to support that kind of growth for Uber?
Right.
I mean, aren't they going up against giants like Google and Facebook?
It's a crowded market, no doubt. But Uber has a unique advantage.
Okay, what's that?
They have a captive audience of users who are already engaged with their platform.
Right.
They can target ads based on user behavior and location, making them highly relevant and potentially more effective.
That makes sense. They've got valuable data.
They do.
On their users' travel patterns, food preferences, and spending habits.
Exactly.
That's a goldmine for advertisers.
It is.
But what about Wall Street's overall outlook on Uber?
Okay.
Are they bullish on their long-term prospects?
Wall Street analysts are projecting a steady 13% annual earnings growth for Uber through 2025.
Okay.
This places their current valuation at a more reasonable 30 times adjusted earnings.
Right.
Compared to Shopify's 94.
Right.
So from a valuation perspective,
okay,
Uber seems to be in a more comfortable position.
So Uber's valuation seems more down to earth than Shopify's.
Yeah.
And they've got this multi-pronged growth strategy.
Uh-huh.
But there's one big elephant in the room when it comes to Uber's future. The rise of autonomous vehicles.
Right.
Some people believe it's a major threat to their business model.
Okay.
What's your take on that?
It's a valid concern, but I think it's too early to write off Uber just yet.
Okay.
In fact, many analysts believe they're well-positioned to capitalize on the autonomous vehicle revolution.
So how would they do that?
Well, remember, they're already the largest ride-sharing demand aggregator, connecting riders with drivers on a massive scale.
Yeah.
So instead of being replaced by self-driving cars, they could become the platform that manages them.
So almost like a management system.
Exactly. They could evolve into a mobility platform that seamlessly integrates both human drivers and autonomous vehicles, giving riders more choice and flexibility.
And they're not just sitting around waiting for this future to arrive, are they?
No, they're not.
They're actively taking steps to prepare for it, right?
Absolutely. They've already partnered with Waymo, which is Alphabet's self-driving car unit, in several markets.
So they're really getting ahead of the game.
Yeah. This shows they're not afraid to embrace the future.
Right.
And adapt to the changing landscape of transportation.
That's a smart move.
Yeah.
It's much better to be a part of the disruption than to be disrupted by it.
It is.
So we've covered a lot of ground here.
Yeah.
Can you briefly recap the key takeaways for our listeners?
Of course, we've explored the ambitious challenge of whether Shopify and Uber can surpass Palantir's market value by the end of 2025.
By the end of 2020.
Shopify has a commanding presence in e-commerce.
Yeah.
Particularly with their expansion into the booming wholesale market.
Right.
Uber, on the other hand, has a multi-market grip on ride-sharing and food delivery, a growing advertising business, and a strategic approach to the future of transportation with autonomous vehicles.
So both companies have impressive track records, strong leadership, and are actively innovating to stay ahead of the curve.
They are.
But let's not forget that Palantir is a formidable opponent. With its own remarkable growth trajectory.
Yeah.
Their data analytics platform is being adopted by businesses and governments worldwide.
That's why this prediction is so intriguing.
Yeah.
It's not just about crunching numbers. It's about understanding which business models are best positioned to thrive in the years to come.
And which one do you think will be most successful?
This raises a crucial question. Which company is best equipped to dominate?
Yeah.
In a future increasingly shaped by automation?
That's a great question, and it's one we'll delve into further in the next part of our deep dive.
Okay.
We'll explore the challenges and opportunities presented by automation.
Right.
Weigh the factors that could accelerate or hinder each company's growth.
Okay.
And ultimately, try to determine which company, if any,
Right.
is most likely to outpace Palantir.
It's a complex equation with a lot of moving parts.
It is.
But that's what makes it so fascinating.
Definitely stay tuned.
Stay tuned. So we've laid out the challenge. Can Shopify or Uber actually surpass Palantir in the next year?
Yeah.
Both have their strengths.
Right.
But they also face some unique obstacles.
Definitely, it's a tight race.
Yeah.
And to really figure out who might come out on top, we need to kind of explore what could trip them up.
Right.
Or propel them forward.
Exactly. So let's start with Shopify.
Okay.
Their success really hinges on empowering businesses.
Okay.
Especially those small to medium-sized enterprises.
Right.
You know, they're the backbone of the economy.
Yeah, they've definitely made it easy for anyone to kind of set up an online shop.
Right.
And then their move into wholesale opens up a huge market with even bigger players.
Yeah, you're right. But here's the potential snag.
Okay.
What if the economy takes a downturn?
Oh.
If consumer spending dips?
Yeah.
Online shopping could slow down.
Right.
And that would directly impact Shopify's growth.
So they're vulnerable to economic forces beyond their control.
Exactly.
It's a good reminder that even the hottest company isn't immune to those broader trends.
You got it. Now let's look at Uber.
Okay.
Their strength lies in not putting all their eggs in one basket.
Right.
They've got ride sharing, they've got food delivery, and even that emerging advertising arm we talked about.
Yeah, it's like they've got multiple engines driving their growth.
Mm-hmm.
So that's got to make them less vulnerable to disruptions in any one market.
You're catching on, but diversification doesn't make them invincible.
Okay.
The ride sharing and food delivery spaces are incredibly competitive.
Yeah.
Companies are constantly battling for market share.
Right.
And that pressure can squeeze profits.
It's a constant hustle to stay ahead.
It is.
And what about regulations?
Oh, yeah.
I mean, Uber's had its fair share of legal battles in different cities and countries.
Regulation is definitely a wild card.
Yeah.
Governments are still figuring out how to handle these new business models.
Right.
So unexpected rule changes or legal challenges could easily throw Uber off course.
So both Shopify and Uber have these vulnerabilities.
Yeah.
That could impact their chances of reaching that $180 billion market value target.
Right.
It's a close call.
It is.
But there's another factor we haven't fully considered yet, and that's automation.
Ah, yes, the automation elephant in the room.
Right.
Self-driving cars, delivery robots
could
really shake things up for both Shopify and Uber.
That's the big unknown, right?
Right.
How will these companies adapt to a future where machines are taking over some of the tasks that they rely on?
Well, imagine a world where goods ordered through Shopify are delivered by drones.
Wow.
Or where fleets of self-driving cars dominate ride-sharing.
Yeah.
Will Shopify's platform still be as essential?
Right.
Will Uber need as many human drivers?
Yeah, it's almost like automation could either be a massive threat or a game-changing opportunity.
Exactly.
Depending on how these companies play their cards.
Precisely, companies that embrace automation and figure out how to integrate it smoothly will likely be the winners in the long run.
So this is where strategic thinking comes in.
Yep.
It's not just about growth today,
Right.
but it's about positioning yourself to thrive in a world that's rapidly changing.
This is why this prediction is so compelling.
Yeah.
It forces us to look beyond the current hype and think about the long-term viability of these business models.
So we've talked about Shopify and Uber's potential roadblocks.
Yeah.
And their dance with automation. But they're trying to catch up to a company that's already miles ahead in the data game.
Yeah.
Palantir's no slouch.
Palantir is playing on a different level.
Okay.
Their data analytics platform is used by governments and businesses around the world to make critical decisions.
Wow.
They're deeply embedded in industries that rely on data to operate.
It sounds like they're operating in a league of their own.
They kind of are.
Their focus on artificial intelligence and big data seems to give them a distinct advantage.
It does. They're at the forefront of a technological revolution where data is king. As more and more organizations realize the power of data-driven solutions,
Right?
Palantir is well-positioned to capitalize on that growing demand.
So for Shopify and Uber to surpass Palantir, they'll need to maintain those impressive growth rates and find ways to kind of outmaneuver a company that's already a data powerhouse.
It's a tall order, but Shopify's dominance in e-commerce and Uber's reach across multiple markets give them some solid foundations to build upon.
And both companies seem committed to innovation and adapting to new realities.
They do, but the key question is, can they innovate fast enough to keep pace with Palantir's advancements in artificial intelligence and big data?
That's the million-dollar question. Only time will tell.
It is.
But let's pause here for a moment and think about our listener.
Right.
What are some key takeaways they should consider when evaluating these companies?
Here are a few things to keep in mind. First, pay attention to overall market trends. Is e-commerce still on a rapid growth trajectory? Is the demand for ride-sharing and food delivery holding steady?
Those are crucial factors. Investing in a company that's swimming against the tide is never a good idea.
Exactly. Second, look at the competitive landscape. How do Shopify and Uber stack up against their rivals? Are they gaining market share or are they losing ground?
Competition is fierce.
It is.
It's important to know who's winning and who's struggling.
Right. And finally, don't forget about the long-term impact of automation. How will self-driving cars, delivery robots, and other technological advancements reshape these industries?
It's easy to get caught up in the excitement of today's trends.
Right.
But it's crucial to step back and think about the bigger picture.
Couldn't agree more. Investing isn't just about picking the hottest stock of the moment. It's about understanding the businesses behind those stocks and their potential for long-term success.
Well said. We've explored the strengths, the weaknesses, and the opportunities of both Shopify and Uber.
We have.
We've looked at the challenges and potential of automation, and we've highlighted the impressive growth of Palantir. So what's next?
Well, now it's time to put all the pieces together. We need to weigh the factors, analyze the trends, and ultimately decide which company, if any, is best positioned to outpace Palantir in the coming year.
This is where the rubber meets the road.
Yes.
You've got all the pieces of the puzzle. Now let's see if we can solve it. So we've explored Shopify's e-commerce dominance, Uber's multi-market strategy, and Palantir's just insane data analytics prowess.
We have.
But now the million-dollar question. Can either contender realistically surpass Palantir's market value by the end of 2025?
It's decision time. We've got 3 companies operating in high-growth sectors.
Yeah.
Proven track records, strong leadership, and a knack for innovation.
So it seems like no matter what, we're looking at some potential winners here.
Absolutely. But for this prediction, we need to laser focus on which company is most likely to achieve that kind of market value growth. That puts them ahead of Palantir within just 1 year.
Okay, game on. So what are the key factors we should consider when making this assessment?
Let's revisit growth rates. Shopify's projected to grow earnings at 25% annually through 2025. While Uber sits at a respectable 13%. Both impressive, but remember, Palantir isn't sitting still. Their growth, fueled by the demand for data analytics, could easily exceed those projections.
So even with stellar growth, catching up to Palantir is a tall order.
It is.
So what else should we be weighing?
Valuation is crucial. Shopify's current valuation of 94 times adjusted earnings suggests that a lot of future growth is already baked into their stock price. It's like investors are betting big on their continued success.
So there's less room for Shopify to exceed expectations, which makes their climb even steeper.
Exactly. Uber at 30 times adjusted earnings seems more reasonably valued. There's potentially more room for them to outperform projections and deliver a pleasant surprise for investors.
So from a valuation standpoint, Uber might have a slight edge. But what about those external factors we discussed? Things like macroeconomic conditions, competition, and automation. How do those play into our decision?
These are the wild cards that could shake things up if a recession hits. Consumer spending plummets. And e-commerce growth slows dramatically. Shopify could face some serious headwinds.
Their fate is really tied to the health of the online shopping market.
It is.
If people tighten their wallets, Shopify feels the pinch.
Exactly. On the flip side. If competition in ride-sharing and food delivery intensifies, squeezing margins and hindering Uber's expansion, their growth could falter.
So both companies are vulnerable to forces beyond their control.
They are.
It feels like there are a lot of ifs and buts surrounding both Shopify and Uber.
There are, and that's why Palantir,
Okay.
despite its already impressive size, might still be the safest bet in this race.
Interesting.
They're not as directly exposed to consumer spending fluctuations.
Okay.
And their solutions are becoming increasingly mission critical.
Yeah.
For organizations navigating this complex, data-driven world.
So if we had to choose, it sounds like you're leaning towards Palantir maintaining its lead.
I am.
Even with Shopify and Uber's impressive potential.
But here's the exciting caveat.
Okay.
I wouldn't underestimate the disruptive power of innovation.
Right.
If Shopify unlocks some game-changing opportunity in wholesale,
Okay.
taking their e-commerce expertise to a whole new level,
Yeah.
or Uber masters the integration of autonomous vehicles, becoming the go-to platform for the future of transportation.
Yeah, the game could change dramatically.
That's why we love these deep dives.
I do.
They're not about crystal balls or guarantees,
Right.
but about understanding the forces at play
Yep.
and the companies that are best positioned to ride the waves of change.
Exactly. And for our listener...
The real takeaway here is that this prediction is just a starting point.
Okay.
It's an invitation to dig deeper, explore the factors that could accelerate or hinder each company's growth.
Right.
And form their own conclusions.
So you've given us a lot to think about.
Good. I'm glad.
Shopify's e-commerce empire, Uber's multi-market hustle, and Palantir's data analytics dominance.
Yeah.
These are companies pushing boundaries and shaping the future.
And that's what makes the market so captivating.
It is.
It's a constant evolution, a race to innovate, a test of resilience and adaptability.
For sure.
In the end, the companies that embrace change and anticipate the future will be the ones that succeed.
So to our listeners, we leave you with this final thought.
Okay.
Don't just follow the headlines. Delve into the details.
Yes.
Explore the potential of these companies. Consider the risks and opportunities. And decide for yourself which one is most likely to emerge as the leader in the years to come.
Happy exploring.